Welcome back, everyone. Michael here with Offshore Citizen. Today I'm going to cover something that is in the news lately. It is already rising up, especially I think we are seeing progress in the wake of Biden becoming president, in the wake of Janet Yellen becoming the Treasury Secretary, and it is something that they are saying could move forward by spring of 2021, and that's kind of disturbing, which is the subject of a global minimum corporate tax. All right, so we're going to talk a little bit about that. We're going to talk about the countries that are involved, etc., and what we might be planning for in order to address those issues over the next little while. So stick around. I'm going to kind of give you my comments on what I see in terms of the direction of things, how it might affect your tax planning, especially if you're planning on moving abroad or setting up a company abroad, etc. Kind of the proposed rates, how that could affect other countries, etc. And so, yeah, we're going to dive into that. But before we do that, if you haven't already, please hit the subscribe button. We love subscribers. Thank you very much. We appreciate your subscription, and hit the notification bell. Make sure you don't miss out on any of our future videos. And if you're at all interested in the subject of international tax planning, how to pay the lowest legal amount of tax possible, how to set yourself up and your business up to optimize your tax, save more of the money that you earn, as well as protect your assets. If you're interested in help with forming companies internationally, interested in opening international bank accounts, payment processing, getting residencies, citizenships, etc., please reach out to me. You can book a call at clarity.fm/Michael Rosmer. There's a link below where you can check out our websites, offshorecitizen.net and offshorecapitalist.com. Okay, let's go. So this is maybe a little bit disturbing. So this is one of two key pillars. I'm going to do a video on the other one sometime in the near future that are proposed by the OECD, and that Steve Mnuchin, I think it was last year, I think it was last spring or something, walked out of talks with a bunch of these different countries over this subject of a global minimum tax. There is some suggestion that there should be a global minimum corporate tax of 13%, okay? Now, how that would get charged is a little bit interesting, right? We can kind of play around with what we want to look at there. But part of this whole move is, I think, generally a dispute, especially aimed at digital type companies, okay? So if we look at what they've done in the past, they brought in, for instance, substance requirements, right? That came in largely through the EU Anti-Tax Avoidance Directive and got pushed on countries like Malaysia, like BVI, etc., to some extent UAE. And so that's one thing that has come out. And so what we see typically is when they want to bring something like this out, what they say is, okay, great, we're going to roll it out, and then we're going to put countries that aren't compliant on the blacklist. And that's a pain, right? That's not good at all. So anyway, we're seeing the possibility that they would maybe do it that way. But the bigger thing is they're trying to make sure that their countries can get a piece of the pie, okay? So if you think about this, if you're UK, and a company is selling a lot to clients or to customers that they have in UK. They're monetizing that market, but these companies are not paying any tax locally. They're paying it in some other country and maybe optimizing for that. They don't like it, right? So this is largely led by UK, by Germany. Now the big thing is that Janet Yellen, since she became the Treasury Secretary, has said she's open to this idea. She's working hard to move talks forward. So this is bad, right? I don't think that you will see actually full implementation of this, in the sense that there will really be a global minimum tax of 13%. What do I mean by that? What I mean is, I do think that some countries will remain holdouts and allow kind of potential loopholes. And I think part of the reason you're going to see that is because there's sort of an acceptance by certain parts of the world that various territories need to be able to offer some sort of favorable tax rates. So good examples of this are the Channel Islands, Isle of Man, Puerto Rico, Madeira. So places like this that are 0 or 4 or 5% tax, etc. And there's kind of this tax justice piece. So I think what you're going to see instead is, first of all, a move, and this is going to be like the first move. I think probably they'll move it along in a different way as they go forward. But the first move will be to say, okay, great. What we're doing is we're going to say that you basically are in a situation that if you are a certain type of business over a certain size, then they'll apply this to you. Okay, so what we've seen in some other places is there's a minimum tax on companies that are earning, say, 750 million in revenue and a certain amount of local tax, right? So I think that's kind of the direction we're going to see, at least as a starting point. I think that what we are hopefully going to see, which we've seen a little bit an example of in UK. UK has brought in some rules against kind of on respect to big companies and digital services to go after companies like Facebook and Google, et cetera. But they've at the same time got some provisions that say if you're under £2 million a year, then that gives you certain favorable treatment. I think what this also does, though, is it means that you should be planning how it is that you're going to structure your income differently than you have in the past. Okay? Because there is certainly some degree of vulnerability. So if you're in a situation where, for instance, you go and you live in some country that has very low personal tax, let's say you go to UAE, or you're a high income earner and you're able to go and take advantage of the Greek program or something like this, what you'll be able to do is you'll be able to say, okay, great, I'm not going to pay tax to the company, right? The company may have this tax rate, but I'll just drain the money out. Or I'm going to earn income through investments or something like this. So this is going to change. I think more and more it's going to be more important where it is you live, not just where your company is. So if I go back 5, 6, 7 years when we were building structures at that time, it was much easier to stay in your home country and set up a business abroad. Increasingly, that's difficult, right? It's still possible. I just did an analysis for someone in Canada the other day where they could save, hundreds of thousands of dollars a year. So certainly, that's an example of something that is possible by staying local. However, you're going to be in a position where it's like, all right, you better consider some alternatives in terms of where you want to live if you're going to optimize your tax. It's going to be more relevant where you live as opposed to just where you have your company. And then the next part is you're going to want to pay attention to how you have, like what type of business you have, what kind of monetization you have. If you pay attention to what they're directing these rules at, they're typically directing it at digital services, such as advertising revenue. They're directing it at monetization of like customer data. And typically you're looking at kind of in certain classes of business, taxing based on where the customers are, as opposed to taxing based on where the business is. And I think you will see that direction. I actually don't particularly think that taxing based on where the customers are is an inherently bad idea. I think it's just really hard to enforce. And there's obviously not an incentive on the other side for people to go along with it. So I think what you're probably going to see is okay, great, let's get, first of all, big companies where we can do some sort of enforcement, right? Then let's target specific types of industries, okay? Let's get some enforcement there. And then let's try and go and coerce countries that are not aren't going to comply with this to basically provide a minimum tax. And what the result of that will be is that you'll see countries opening up other loopholes for you. So that's something to really watch over the next few years as we pay attention to how can we optimize here. So anyway, I hope that's helpful. As I said, this is kind of a constantly evolving world. Everything is changing more probably now than any previous time. So make sure you pay attention to what the changing rules are, how they might affect you, where you're going to live, how you're going to set up your company. You can save a lot of money, or you can lose a lot of money depending on doing it poorly or well. And so if you're interested, reach out to us. Happy to help you. Again, tax planning, asset protection, company formations, bank accounts, residencies, citizenships. We can help you with all that. Book a call, clarity.fm/Michael Rosmer. Check out our websites. You can send us a message through there, offshorecitizen.net, offshorecapitalist.com. Smash the subscribe button, hit the notification bell if you liked the video, and I'm going to see you guys on the next video.